All right, so let's get started with today's webinar. First things first, I hope you guys are doing well. I'm pretty excited right now. Normally in these webinars, every time I do a webinar, I discuss my trading strategy. I discuss support resistance areas, candlestick analysis, and the very basics of entering trades, like the very basics. But today, I'm going to be taking that a little bit further. Today, we're going to be talking about advanced entering trades. It's something I've never covered before in a webinar, at least not a public webinar. For the advanced course, I cover stuff like this regularly, but for a public webinar, this is the first time I've ever covered it before. So I'm really excited to get into this because it's a pretty cool subject. And I feel that most people have no clue what they're doing when they're entering trades. So in today's webinar, we're going to be discussing entering trades at the right price and the right time. So I'm going to disable I'm already getting distracted by the chat. It's already happening. So where were we? Yeah, in today's webinar, we're not going to be going into too many details on my trading strategy. There's webinars on my trading strategy already. In February, I done 3 entire webinars over the course of 3 days. So that was like, I think anywhere between 4 to 6 hours worth of webinars over the course of 3 days, discussing my strategy in exhaustive detail. I just went over every part of my trading strategy. So those webinars are out there. They already exist. I'll link you to them after this webinar. So I'm going to link you to those webinars. Those webinars already exist. They're already out there. So I don't want to spend time today going over what I went over a few months ago in those webinars. Think of today's webinar as a continuation from those webinars. So today's webinar is a continuation from the first 3 webinars where I discussed my strategy. In today's webinar, I'm going to gloss over my trading strategy in just a quick 5 minute summary of my trading strategy. Just for those of you who are new, that way you kind of can keep up with what I'm talking about. But other than that, we're not going to be discussing my trading strategy in any real detail. We're going to be discussing how to enter trades. That's what we're going to be discussing today. Now, you can use this technique for entering trades with any trading strategy. It does not have to be mine. We're just using price action to figure out good entries, good stops, good targets. So this is transferable to almost any trading strategy. If you're not trading my strategy exactly, you can still use what you learn here today. I'm probably going to disable the chat for the first 45 minutes of this webinar. Or at least I'm going to hide it so I can't see it because I get very distracted by chats. Another thing I wanted to say quickly is my webinars are not flashy. They're not scripted. So I do ramble sometimes. I do get off subject. Please put up with that. I'll try my best not to, but sometimes I do. Like I said, my webinars they're not scripted. I do have a few talking points, but I'm not an internet marketer. I'm not like doing these big flashy webinars, giving you just a little bit of information. That way I could sell you something. I just try to talk about a subject that I know. And I just have like 1 or 2 slides and then I just switch over to the charts and I just go on and on and on. So, I'm going to try my best to share as much content as possible. But yeah, keep in mind that I might ramble, I might get off subject. Please keep questions on subject. This webinar is about entering trades at the right time. Like I said, I won't be discussing details about my strategy because those webinars have been done. They're available for free online and I'll link you to them. And if you guys see anybody asking off-subject questions, please remind them of this. Okay, one more thing before we kick off. Who am I? For those of you who are new and don't know me, my name is Nick Bencino. I started trading at the age of 16 in 2003, long time ago now. I started trading stocks back then. It was part of a school project. I started trading Forex specifically 2 years later when I was 18. So that was around about 2005. I'm a price action trader. I trade pure price action. That means no indicators on my charts at all. This allows me to keep my charts clean, to keep my trading strategy clean and simple, and to just have a very relaxed approach towards trading. No indicators, no mess, no stresses. I started Forex for Noobs in 2007, forexfornoobs.com. Forexfornoobs.com is the first price action site, Forex price action site online. Yeah, been around for quite a while now. It's actually next year, July next year, is the 10-year anniversary for Forex for Noobs. So I'm pretty excited about that. Anyway, enough bragging about my website. Let's get into the actual subject of today's webinar. And we're going to kick off with just a quick 5-minute, kind of 5-minute refresher on my strategy. For those of you who are not familiar with my trading strategy, I just want to quickly go over a 5-minute, just a 5-minute summary of my strategy. That way you kind of understand what's going on here today. So my strategy is very simple. All I do is place support resistance areas on my chart and trade reversals from those support resistance areas. Support resistance areas are placed based on recent bounces. So if we look here at this USD CAD 12-hour chart, we see a lot of bounces. So see this bounce here, that bounce there, there's a bounce up here, there's a bounce there, see price came up and bounced there. There's another bounce from this level here. There's another bounce there. So I place these support resistance areas based on these bounces. When price bounces from an area twice, so more than once, that's when I place a support resistance area there. Or at least that's when the support resistance area is confirmed, when we get 2 bounces from the same area. I place support resistance areas on the bodies of candles, not the wicks. Some people place them on the wicks down here. I place them on the bodies. I prefer them there. Personal preference, but that's how I like to do my support resistance areas. So I place these support resistance areas on my chart. I don't move them very often, even when they're broken. I don't care if a support resistance area is broken, and you can see the proof right on this chart that it doesn't matter. Like I said, we have a bounce there, we have a bounce there, price broke, came up, and then it bounced again. Then came up here, bounced again. Then it broke, and it came down and it bounced from the exact same level. So this level here, I've had this on my chart for a long time now, this level, this, what is it, 129.50, roughly that level. It's had 1, 2, 3, 4, 5 bounces since what, April? No, since March. And that's just what's viewable here. I'm sure if we take it back, we could see even more bounces. Yeah, there's a bounce there. Oops. See, there's a bounce there, a bounce there. So my point is, I place these support resistance areas on my chart, and I just leave them there. I adjust them sometimes, but you know, it's not very often that I adjust them. You know, maybe once per week I adjust them. Once every 2 weeks. It just depends how often they need to be adjusted. Okay, so after I place my support resistance areas, I look for indecision candles to form on those areas. Now, I call them indecision candles. Some people have different names for them. Some people call them pin bars. Some people call them dojis. Some people just call it reversal candles, whatever. I call it indecision candles because to me, they just mean indecision. So when price pushes up to one of my areas, like this here, and then we get these types of candles forming, these kind of doji looking candles, that's when I look to enter a trade. That's here I would have entered, well no, here I did enter a short trade on this particular setup here. Anyway, this is the 6 hour. You can see the time frames up here. I place my support resistance areas on the 12-hour and daily. The 12-hour time frame and the daily time frame is where I place my support resistance areas. And I use those support resistance areas to trade all time frames. Anyway, I look for reversals from support resistance areas. So when price approaches a support resistance area and we see indecision forming, dojis, whatever you want to call them, I look to trade a reversal. I don't enter right away. We're going to be discussing entries today, But, you know, that's my first sign that there's a potential reversal forming, and that's where I might enter the trade. So yeah, that is just a basic summary of my trading strategy. It's a very basic summary. I wanted to go over this today just so you guys who are new to my strategy understand what I'm talking about when we look at entries. So when we're looking at entries, we're talking about reversals from areas of support or resistance. So let's get into the talking about entries and exits and all that stuff. All right. Damn it. Why is that full screen? Okay, that's better. All right, so where was I? Entering trades the right way is not exactly easy. It's, you know, it can be a little tough for people, and there's a lot more to it than a lot of people think. You have to think about it this way. Entering a trade at the right point is going to make a very, very big difference to the end result of the trade. Even just 5 pips. Even just 5 pips difference in entries can make a huge difference. Now, I'm going to show you an example of a trade that I posted to the forum on May 15th. So this trade was traded by me and by a lot of other traders in the advanced course. So yeah, this was the trade. Now we're going to take a look at this trade, and I'm going to show you why I was successful in this trade, while a lot of other people taking this exact same trade, the precise same trade, a lot of these people failed. And that's because of entries. An entry being just 5 pips difference, even less than that, can make a huge difference on the end result of your trade. Now, let's look at this trade. So this was the trade setup for me. My entry was, well, let's switch back to, well, let's do it like this. Is that going to stay on top? Yeah, it is. Yeah, it is. All right, so my entry was somewhere down here. All right, so I'm going to adjust this to show you guys my the entry I gave for this trade. That's the stop loss. The stop loss is 12968, and my target was 12848. All right, so that's how I traded this trade. You could see this this cool little tool here. It's you know, it shows you your entry, your stop loss and stuff. Clearly the black line is the entry, this one here. The target is at the end of the green, and the stop loss is the red at the end of the red. So this is how I took this trade. This is how I entered the trade. This is where my stop loss was. This is where my target was. Now, I was successful in this trade. It was a profitable trade for me. And wait, let me zoom in. Yeah, that's better. Yeah, so this trade was a profitable trade for me. But for some people, it wasn't a profitable trade. A few people that entered roughly at the same time as me ended up profiting. A few people ended up losing out on this trade, or exiting early with not as much gain as they would have wanted. Okay, I'm gonna mute the chat. Sorry guys, I'm getting distracted already. If you need help with TradingView, contact their support team. That's what they're there for. Just email them and ask them. I don't really know how to do it. I set it up like 3 years ago when I signed up with these guys, and it's been the same ever since. I'm gonna mute chat, guys. Sorry, I'm getting distracted by the chat already. Okay, anyway, chat's muted. Yay. So where were we? All right, yeah, so this USD CAD trade right here, like I said, I entered it. For me, it was a profitable trade. For some people, exact same trade, slightly different entry, it was not profitable. So let's look at how a different entry would have affected this trade. I'm going to make the entry 5 pips later, just 5 pips later. So 12929. So we're going to minus 5 pips from that. So the entry becomes 12924. the stop loss needs to be the same. We're going to put the stop loss back up to where it was. So the stop loss is going to stay here because of important reasons. There's an important reason for this stop to be here, which I will discuss later in this webinar when we look at this example in more detail. Now, when your stop loss is a bit higher, and your entry is a bit lower, that's going to affect your risk to reward ratio. My minimum risk to reward ratio on a trade is 2. That means that my target is double my stop loss. That is the bare minimum. I do not enter a trade unless my target is double my stop loss. That's just a smart way to trade. It's a 1 to 2 risk reward ratio. It ensures that you can survive losing streaks because, if I win 10 trades, I'm up, let's say I'm making $100 per trade. I win 10 trades. Sorry, no, let's say I'm making $200 per trade. It's better saying it like this. Let's say I make $200 per trade. I win 10 trades. I've got $2,000. Now, let's say I'm losing $100 per trade. I lose 10 trades. I'm still profitable by $1,000. That's a very basic example, but my point is I like to keep a risk to reward ratio of 2 because it ensures that if I ever go into a losing streak, I can survive that losing streak with minimal damage to my account. To keep a risk reward ratio of 2 on this setup here, you're going to have to extend your target down to roughly here. So what happens when you do this? The trade would not have been profitable, clearly. Price would have come down to here and it would have just missed your target just by a few pips. And it would have been a failed trade. Now, this happened to some people in the forum. Some people in the forum actually entered in 5 pips after me. Just 5 pips seems like nothing, but it affected the trade so much that they ended up losing out on this trade. Now, this isn't always going to happen. Obviously, sometimes price is going to keep moving down and they would have hit their target. But the point I'm trying to make is where you enter is going to have a huge impact on the end result of that trade. And it's very important to try and get in at the best price possible. The earlier you get in, the better. But there's also a downside to that because if you enter too early, you might be getting into false breakouts, false moves. So, you need to find a way to balance it. It kind of becomes a bit like an art, really. Balancing your trades becomes a bit like an art. Where are my notes? There they are. All right. So I have a simple 4-step process, a 4-step approach to entering trades. And I call this approach STEP. It's a bit of a cheesy name. Learn to take a step. I know it's a bit of a cheesy name, but please bear with me here. I like having names like this for things in trading. So like having a name like this, STEP. It's easy to remember. It's a common word in English, STEP. We probably use it, a bunch of times a day. And having a word like this just makes it easy to remember. So this is how you enter a trade in order of importance. First step is placing your stop. So stop, you use price action to find a safe stop. Second step is target. Use price action to find an easily hit target. Third step is entry. Use price action to find the right entry. And the fourth step is to place the trade. So this simple little process step is how you should approach every single trade you're going to enter. And it's in this order of importance: stop, target, entry, and then place the trade. Stop is most important because your stop needs to be right every time. Your target, you kind of have some wiggling room. You can mess around with your target. You could say, okay, this time I'm going to extend my target a little bit. Your entry, you can mess around with that too. There's some room to play with your entry. But your stop has to be right. It has to be good. It has to be a smart stop. Not a dumb stop. It has to be a smart stop. I like to place smart stops. I don't like to place dumb stops. Your stop is important. So this is in order of importance, this process of step. Stop, target, entry, place. Stop, target, entry, place. You have to memorize that. Every time you look at a trade, you need to approach it in this way. You need to find your stop, Find your target, find your entry, and then place the trade. If you can't find a good stop, then you skip the trade. It's not worth taking. It's too risky of a trade. So, why isn't this switching? There it goes. All right. So why do I have a picture of a mountain with a sky? Little silly, I guess. But I actually do have a pretty important point to make with this. I'm going to re-enable chat real quick. I get paranoid that my audio is cutting out or something, so I'm going to re-enable chat just in case the audio is dying, and that way people can tell me. Oops. There we go. Okay. So why do we have a mountain here? Now, this is a concept that I want you guys to listen very closely to, and I want you guys to really think about this, and I want you guys to, if you take nothing else away from today's webinar, if you think everything else I've taught you today is useless, this part is going to be very, very important, and it's something that you need to take with you through the rest of your trading career. It's one of the most important lessons I've ever learned in trading, and hopefully it's one of the most important lessons you guys have ever learned in trading. So what is this? This is a mountain, and this is a nice a plane, an open plane. Now, this is how you have to think about taking a trade. When you take a trade, let's say your entry is here. So let's say you're kind of lost out in the wild, right? And you're here. That's where you got lost. This little black thing here. Then you need to find your way home, right? You're lost in the wild. You need to find your way home. What way are you going to go? You don't know where home is. It could be any direction. What way are you going to go? Are you going to go up the big snow-capped mountain, risk dying? Or are you going to go this way to get home? The open plain, where, you know, it might not be warm, but it's warmer than the top of a mountain, and it's nice, easy terrain because it's flat and open, right? Again, I know this sounds silly, but bear with me here. This is how you should approach entering trades. When you enter a trade, you want to place your stop loss in a place that it's going to be hard for price to move in that direction. So let's say this is where you enter your trade. Do you want to place your target here and your stop loss here? What use is that going to be to you? Because it's going to be hard for price to get up here and then come down here and hit your target, but it's going to be very easy for price to go there and hit your stop loss, because this is the path of less resistance. This is the open flat plane, and this is where the barrier is. You know, this is where price is going to struggle to get through. So you don't want to do that. You want to do the opposite. You want to make your stop loss hard for price to hit. So your entry is here. Your stop loss needs to be here. It needs to be behind a barrier. It needs to be hard for price to hit. So this stop loss here is hard for price to hit, whereas your target needs to be here. Your target needs to be in the path of less resistance. Your target needs to be across the open plane. Your target needs to be easy to hit. Price needs to just kind of flow towards your target. But if price tries to move towards your stop loss, it needs to encounter several barriers. It just needs to smack into those barriers, and it needs to stall. If you place your stop loss here, for example, and you enter here, it's going to be easy for price to hit your stop loss. You don't want that. You want your stop loss beyond barriers. So one of the most important lessons that I have in trading, that I learned in trading through trial and error, is to make your stop losses hard to hit. Your stop losses need to be hard to hit. And that's what you always have to be thinking about when you place a stop loss. And your targets, they need to be easy to hit. You always have to be thinking about that when you place your targets. Stops, hard to hit. Targets, easy to hit. That's very, very, very important. So does everyone understand where I'm coming from with that? Stops, hard to hit. Targets, easy to hit. Your stop needs to go, price needs to move over barriers to hit your stop loss. But your targets, Price shouldn't move over barriers to hit your targets. It should just flow to your target. We all good with that concept? I'll just give you guys a minute to respond. I don't have a name for this concept. The mountain concept, I don't know. It doesn't really matter what it's called. It's just something that you have to remember. Your stop loss needs to be hard to reach, really hard to reach. Your target needs to be easy to reach. A lot of yeses are coming through, so I'm just going to assume that you're all okay with this. And I'm going to move on to actually showing you guys how to place hard stops. Well, not hard stops, stops that are difficult for price to reach. We're going to look at placing stops that are difficult for price to reach. Let's get rid of this thing and let's get to the actual charts. This is the fun part where we actually get to the charts. We're going to look at several examples. These are all trades that I took. They're all trades that I shared to the forum or that I shared to YouTube before they actually triggered. I don't want to do this thing where, you know, I scan back on my charts and I look for like these perfect examples and then I show you guys those examples. I'm showing you guys actual trades with my actual entry, actual stop, actual target. Because if I do it that way, then you guys actually are learning from real examples. I'm not cherry picking perfect, beautiful examples. Can we place a live trade? No, because I trade 8-hour, 12-hour charts, 6-hour charts. You know, trades have to form. You can't just place them because you feel like placing a trade. Anyway, please keep questions until the end. Let's look at USD CAD. Where was the... Give me a quick second here. I'm just going to go back to the forum and grab my entry price and all that stuff for this trade. Oh, that's already accurate. All right. Yeah, so this trade example. Now, this is a trade that I entered. It's a trade that I entered on the 16th of May. I can't remember. I shared this trade on the forum. I can't remember if I shared it in my weekly analysis on YouTube. But feel free to go back to my analysis for that day. And I think I probably mentioned this trade in my analysis. So why did I trade this trade the way I did? And why did my stop loss go up here? So let's start by analyzing stop losses. We're going to go over stop losses in a lot of detail. My stop losses are based on price action. People make the mistakes of placing arbitrary stops, and they do this because they're told that you have to place a stop loss in trading. So you know, someone will say, you have to place a stop loss in Forex. And, you know, that is true. You do have to place a stop loss. It's, you know, you can't trade without a stop. But when people are told that, they just start placing a stop just because they think they need to, but they don't place it properly. They don't place a good stop. They don't place a smart stop. They place a dumb stop. They just place an arbitrary stop at any level that looks roughly right. But that's not how you place stops. You have to place your stops based on price action. You need to actually do some analysis on your stop and figure out a good spot for your stop loss. I like to place smart stops. I like to think about the best place for my stop loss. I like to put my stop loss behind several barriers. I want to make it hard for price to hit my stop losses, not easy. So don't place dumb stops, place smart stops. And this is how you place smart stops. So when you're looking at a trade setup, right? The first thing you do, so this is the trade setup here. I'm going to move this again and then I need to put it back later. But this is the trade setup here. And more specifically, this is what the trade setup looked like when I planned to enter it. We had a nice strong trend leading up to a resistance area, this blue area marked here, and we had indecision forming on this area. So when I looked at this, I said to myself, where should the stop go here? So the first thing I did was look to the left. By looking to the left, I mean look to this side. The last 5 or 6 candles That's what I look at, the last 5 or 6 candles. I look at the most recent high for those candles. We're talking about a short trade, so that's why we're talking about the most recent high. If we're looking at a bullish reversal, so a long trade, we'd be looking for the most recent low. But we're looking for the most recent high in the last 5 or 6 candles because we want to take a short trade, so we need a stop up here somewhere. So where was the most recent high in this trade? At the time of this candle, because I was looking at it during this candle, the most recent highs were here. So that is the first barrier. That high is the first barrier for price. When I see that, I say to myself, okay, I need to place my stop loss beyond that high. And not just 2 or 3 pips beyond that high. I want my stop 5, 6 pips beyond that high if I can get it there. So yeah, that was the first barrier. This high was the first barrier. It doesn't always have to be 5 to 6 pips above it, but just, you know, if you can get it 5, 6, 10 pips above the high of the previous candles, then do so. In this case, I could get it significantly higher than that. So that was the first barrier I look for. That's the first step. You look to the left and you identify the most recent highs. These were the most recent highs. So I knew my stop loss needed to go above here because that is the first barrier, like I said. What do you look at next? Next is support resistance. In this example, like I said, it's a short trade. So we're looking at the resistance area. I want my entry to be, my stop loss to be beyond the resistance area. Now, first thing I'm going to do is I'm going to remove this because a lot of people get confused by this thing here. That shaded area I have around my center line of my resistance area, that's just there as a visual aid. I just use that because it makes it easier for me to see the charts properly, to see support resistance properly. I just like having that there, but the width of that area, that doesn't really mean anything. So when I say that I want it above the resistance area, what I mean is I want my stop loss to be beyond this point. So this is the resistance area I've identified. Resistance area is here. I want my stop loss to be, you know, a fair way above it. 10, 20, 30 pips. As far as I can get it above this area, that's where I want it. So why is this? I want it this way because I want my stop loss to be hard to hit. I want it to be beyond barriers. Remember the mountain I showed you? These highs here plus this resistance area here, those are the mountain. Those are the mountain in that example. And I want buyers to if they want to hit my stop loss, if buyers want to push up and hit my stop loss, I want them to have to go over that mountain to hit my stop loss. I want them to have to like struggle, not just have an easy, smooth ride down. I want them to have to really struggle. I want them to make a new high. I want them to work their way through that entire resistance area. I really want them to struggle to hit my stop loss. That's why my stop loss was up there. So my stop loss ended up being, yeah, that's roughly where it was. So that's why my stop loss ended up being up here, because I was placing a stop based on these recent highs and based on this resistance area. I wanted price to have to struggle through that resistance area and through those recent highs to hit my stop loss. And that's how you have to think about stops. You need price to struggle to hit your stop loss. You need it to make new highs. You need it to break beyond resistance. And you know, one thing to keep in mind is the further away your stop loss, the better. You know, if my stop loss was all the way up here, all the way up there, it might take 6 months for price to hit my stop loss. That's not very good though, because I'll probably get, well, no, I wouldn't, but you know, depending on your account size, you might get a margin call. You might blow your whole account, let's just say, because your stop loss is too big. But, you know, technically speaking, the further away your stop loss, the safer it is because it's less likely to get hit. The closer your stop loss is to your entry, the more likely it's going to get hit. So this stop loss here would not be hit for like, what, 6 months, a year, maybe even 5 years. But if you were to place your stop loss all the way down here, it might get hit in a few seconds. So the further away your stop loss, the better. But that's within reason, obviously. You can't have your stop loss too far away. So the keys to placing a good stop loss is, if you're taking a short trade, place it beyond the most recent highs and place it beyond the closest resistance area. And after that, you place it as far away as possible, as long as you still maintain a good risk to reward ratio. So as long as you still maintain your minimum risk to reward ratio. So for me, my minimum risk to reward ratio is 2. So that's my stop loss being half the size of my target, or my target being double the size of my stop loss. That's my minimum risk to reward ratio. So I was able to put my stop loss roughly up here to maintain that 1 to 2 risk to reward ratio. And that stop loss was a smart stop because it was beyond those recent highs and beyond the resistance area. So a lot of people, when I tell them this, a lot of people say to me, wow, you have a lot of criteria for your stop. What do you do if the stop doesn't meet the criteria? What do you do if, let's say, for example, in this trade here, what if this wick had come up to here? Then I would need to place my stop loss beyond the most recent high. My stop loss would need to be up here. So they say to me, what do you do if that happens? The answer is simple. I don't take the trade. You don't have to take every trade that forms. Just because I know there's a reversal forming here, if the wick is that high, then I'm not going to take the trade. Why am I not going to take the trade? It's pretty simple. Because in this case here, buyers have moved into this area recently, very recently. So buyers have moved into this area very recently. So if I place my stop loss here in an area in which buyers have moved recently, what's to stop them from moving there again? What's to stop them from just like pushing up into that area? Nothing. Nothing at all. That's why I place my stop loss beyond highs, beyond the most recent high, beyond resistance, because that's where the barriers start coming in. That's where price starts smacking into barriers, starts smacking into barriers of the most recent high, starts smacking into barriers of resistance areas. So, that's how you should approach stop losses. We're going to look at more trade examples, but we're going to look at USD CAD first, and then I'll show you a few more examples of recent trades. I just want to place this blue area back here. Oh, there it is. Yeah, I just want to place it back. I really don't like not having these blue shaded areas around my support resistance. It's a really weird thing I do, but I kind of have to have them. Otherwise, I feel like I can't do my analysis. So yeah, that's the basics of stop losses. Place it beyond the most recent highs, place it beyond resistance areas. And that's just, for short trades. If you're doing a long trade, if you're buying, you want to place it beyond the most recent low, and you want to place it beyond the support area. Anyway, so yeah, stop losses. I think we've covered most of stop losses, but the core concept to remember is stop losses need to be hard to hit. It needs to be hard for price to hit your stop loss. Think of the mountain. Price has to cross a big barrier to hit your stop loss. Whereas targets, price needs to flow towards your target. It needs to be easy for price to hit your targets. So that takes us to targets. Now let's take a quick look at targets, and then we'll look at several trade examples. So like I said, sticking with the same analogy, targets need to be easy to hit. Targets need to be across an open plane, path of less resistance. Price just needs to flow towards your targets. And targets are done much in the same way. When you're looking to set your target, you look to the left. That's the key. It's the key to most things in trading. You look to the left. By look to the left, I mean look over here. The trade was forming here. You look to the left. You look at the recent data, most recent data. What do we see when we look to the left here? Well, we see that price stalled around here the last 2 times it pushed through the area. So price came up through here, stalled, came back down, stayed here for a while, and then it pushed up. On its way down, price came here, stalled for a while, pushed down real quick, came back up. So, you know, when you look to the left, you see price was stalling here. Last time it pushed through here, it stalled. And that's why Tom, that's a good question. I will answer that in a second. But no, this didn't violate my entry rules, but we'll talk about entries in a second. It didn't violate my entry rules because I entered on a retrace, which is something we're going to cover. So yeah, why did I place my target down here? Why was my target here? My target was here because when I was looking to place my target, I looked to the left. I looked to the left and I identified an area in which price was stalling recently. It stalled all the way through here, and then on its way back down, it stalled again, spiked down real quick, and then stalled on its way back up, and then pushed through. So this is an area in which we know it's very likely that price is going to stall because of the very recent history. When you look to the left, you see that price stalled there the last 2 times it went through there. So, you know, it doesn't take a lot to figure out that price might possibly stall there again, does it? I mean, it stalled there the last 2 times. And I might not necessarily want to stay in the trade if it's going to stall there, because stalling sometimes leads to proper reversing, like it actually did in this case in the end. It kind of stopped here and then it pushed up. So that was one of my main considerations when looking at this setup here. I looked to the left, I noticed where price was stalling, and that's why I wanted my target down here. So I said to myself, all right, my stop loss is up here. Can I get a 1 to 2 risk reward ratio if I were to enter this trade here? My stop loss would have to be up there. Can I get a 1 to 2 risk reward ratio? No, not really. My 1 to 2 would be all the way down there if I were to enter the trade here and have my stop loss there, because that's the smart stop. That's beyond the recent highs and beyond resistance. If I had a smart stop and I had a smart target, well, no, this wouldn't be a smart target. If I had a smart stop, could I have a smart target? Could I have my target here where it should be? My target should be here because this is where price was stalling. So that's where my target should be. If I had my stop loss here, could I have a smart target? No, I couldn't. My target would have to be down here to maintain a 1 to 2 risk reward ratio. So that meant I had to mess around with my entry. My entry had to be a bit higher and needed to be on a retrace, which is something we'll get into in a minute. But that answers your question, Tom. So yeah, for targets, your targets need to be easy to hit. When you notice barriers, right? When you notice barriers like here, for your stop losses, you want to place your stop losses. Sorry, I didn't highlight that properly. When you notice barriers like here, this resistance area, and barriers like recent highs, you want to place your stop loss beyond those recent highs, so up here. But your target, you don't want any barriers in the way of your target. You don't want your target to have to go through barriers in order for it to be hit. You don't want that. That's why I put my target here. I put it before the barrier, or I put it at the barrier. This was the barrier here, and I put it there. So this goes back to that mountain example. You know how I showed you the mountain? This goes back to that example, and I'll bring that up again, actually. So, targets need to be easy to hit. No resistance in the way. Stop losses need to be hard to hit. Stop losses need resistance in the way. They need something blocking them. So that was my philosophy going through that trade, and it worked out quite well for me. I'm just going to quickly read through the chart. All right, no real questions. Yeah, so where were we? Yeah, targets and stops. We talked about targets. Now, let's take a very, very quick look at entries. Once you've identified a good stop loss and a good target, you need to check your entry point. You need to see if the trade's viable. And to do that, you need to figure out your entry point. Now, for me, for this trade, My entry point was here. This was my first entry point. Wait, let me zoom in a bit. Better if I zoom in. So my entry point for this trade was right here. That was the first entry point I decided on. Now, why did I decide on an entry there? Why did I want to enter there? The reason is because I want sellers to confirm that they've taken control of price. And how do sellers confirm they've taken control of price? They make a new low. So we have a reversal set up here. Now, you can't enter a reversal setup as soon as indecision forms, because that's not how reversals work. Price can continue up easily. But when sellers start taking control of price, what do? They start pushing lower and they make a new low. They break the low of the previous candle, of the indecision candle here. So when sellers started pushing lower, when it became clear that sellers were taking control of price, that's when I wanted to enter that trade. I wanted to enter when sellers took control of price. So to me, a clear indication that sellers have taken control of price is a new low. When a new low is made, that starts to tell me that price is beginning to trend down. New low equals price is starting to trend down. So when that new low was made, that was my trigger to enter the trade. The problem was, if I enter the trade down here, right, where I initially wanted to enter, and I had my stop loss here where I initially wanted my stop, and I had my target here where I want my target to be, because I wanted my target to be there, as I've already explained. My risk to reward ratio would be 1.47. Not viable at all. Not good enough. I want a risk to reward ratio of 2. So I said to myself with this particular trade, now I don't do this with every trade, but I said to myself with this trade, if price breaks below my entry point, which is here at the 129.20, if price breaks below that entry point, 129.20, then I'm going to wait for price to pull back up a little bit. You know, if it pulls up 5, 10 pips, I'm going to wait for it to pull back up a little bit, and then I'm going to enter. And that's what I did. Price pulled back up a little bit to the 129.29 there. My stop loss went roughly here. My target went, no, my target was a bit higher, so my stop loss was a bit. Yeah, so that was roughly the trade as I took it. So yeah, that was the trade as I took it. Now, like I said at the beginning of this webinar, when I first showed you this example, a lot of people entered the same trade as me, but they failed on the trade. Why did they fail? Because they didn't enter the trade properly. They entered the trade down here. They didn't wait for a retrace. They entered the trade down there, which meant that if they had their stop up here, they had a bad risk to reward ratio. They had a 1.6 risk to reward ratio. So to get a good risk to reward ratio, their target had to be down here. But that target is then beyond, or at least at the very low side of this barrier here. So they broke a very important rule in trading, at least a very important rule in my strategy. And that rule goes back again to this somewhat silly but very accurate example of the mountain. They broke a rule in trading. They did place their stop loss beyond the barrier, right? They placed their stop loss beyond the barrier. They placed their entry here, and they placed their target beyond the barrier. So let's say that this here is a barrier. What's a good color for a barrier? All right, that's a barrier there. That's, I don't know, a volcano, whatever you want to say it is. So they placed their stop loss beyond the barrier. That's all well and good. That's fine, stop loss beyond the barrier. But their target got to here and then it reversed because they placed it beyond the barrier. Whereas my target was here. It was before that barrier. So it was easy for price to hit my target. My target didn't come into price didn't have to struggle to reach there. It reached there. hit my target, then it reversed. So that was the difference. In this one example, that was the difference. Now, it's not always going to be like that, obviously. But placing a good target, a good stop loss, and being patient with the entry, allowing price to retrace just a little bit with the entry, allowed me to profit in a trade where others didn't profit. Same trade, different results, just because my target was 5 pips earlier. Or not even 5 pips earlier, it was later because I got in after them. But I had the patience to wait for it to retrace 5 pips. So my target was 5 pips, my entry was 5 pips above theirs. So, yeah. Do you guys understand that concept? Because now we're going to go look at some other trade examples, some other recent trade examples. I'm also going to show you guys a failed trade because I want to make it clear that this doesn't always work. Yeah, you can enter with limit orders. That's fine. Sorry. If you are cool with that, and if you guys understand that so far, just type yes. That way I know, and we'll move on. And we'll look at Euro USD. Recent Euro USD trade. Someone was asking about continuations earlier. I'm not sure if you're still here. Maybe they got annoyed because I told them to stop asking questions out of, you know, when it wasn't question time. But yeah, someone was asking questions about continuations. This is somewhat of a continuation trade that we're going to look at right now. It was a Euro USD trade. I talked about this trade in the analysis. I don't use trailing stops to whoever's asking that. I talked about this trade in the analysis. So if you go back to my YouTube analysis on my YouTube channel for around about, I think it was the 12th of May or maybe the 11th of May. I talked about this trade, this possible setup, and I said that I would be looking to enter this trade. And I did end up entering it. And I ended up using the same philosophy as I did with the USD CAD trade. But this is more of a continuation trade. So why is this a continuation trade? Why is this not a classical reversal setup? Here we had price, you know, obviously Euro USD was in a massive downtrend. Price was in a massive downtrend. Price was pushing down. It came back up to this resistance area and it formed an indecision candle. So it was just a brief move back up to this resistance area. It was pretty clear to me that the trend was very likely to continue and price was just stalling here for a little bit, coming back up, testing this resistance area and then continuing down. We got a nice little indecision candle. We got a nice little risk to reward ratio. So this ended up being a very, very nice trade. What was I going to say? Yeah. So let's break down this trade. Let's break down my entry, my target, my stop loss and all that stuff. And I'll explain why I placed it there and all that kind of stuff. Okay. So my stop loss, it went above the recent high. So this was the recent high. Now, ideally, I wanted to have my stop loss a little bit higher here, but I couldn't get it a little bit higher. I had to have it just a few pips above the most recent high. But it was still a smart stop loss. It was still a good stop loss because it was beyond the recent high and it was beyond the resistance area. So the resistance area I had placed, it was beyond that. So beyond resistance, beyond recent high, thumbs up. That's a good stop loss. So I placed my stop loss there. My target, as you can guess, I wanted to place it before this barrier here because this barrier here, price stalled there and reversed, right? So I wanted to place my target before that barrier there, which I did. I placed my target here. So see, the exact same as the USD CAD trade, the same theory here. And my entry was placed, in this case, it was just placed at the low of the indecision candle right here. The reason this one was placed here was because I had a 1-to-2 risk reward ratio at the low of the indecision candle. With this one in particular, I waited for price to break by a few pips, then pull back up, and then I entered. I didn't enter as soon as it broke. It's usually a bad move entering as soon as it breaks. The reason for that the reason you don't want to enter like the second it breaks is because price very often breaks a new low or equals a new low. So I don't like it when price just equals a new low. So here, price could have just hit the same low as this candle, as the previous candle. It could have hit the same low, and then it could have continued moving up, and that would have been a failed trade. So I waited for price to break just a few pips, and then it kind of retraced up to my entry, which was here. Anyway, that's not that important. The point is, my entry was at the low of indecision. My target was just above the high of indecision. Sorry, my stop loss, was just above the high of indecision. You know, ideally, I would have wanted a slightly larger stop, but it wouldn't have worked risk-reward wise. So I sacrificed a few pips on my stop loss, but it was still a safe stop. It was still a smart stop. It was still beyond the most recent high, which is, you know, number 1, and beyond the resistance area, which is number 2. It was still a smart stop. And my target was, you know, at this barrier, and it ended up being a good trade. Now, in the next webinar, we're going to be discussing how to extend targets, because this trade could have easily been extended. Take out part of your position here at your first target and then extend it. And you could have rode this, you know, all the way down possibly. So we're going to be talking about that in the next webinar, how to extend your targets. But today we're talking just about the entries and how stop losses and targets all tie into entries. Any questions about this particular example here? Yeah, well, I wouldn't say it's easy. Do I always enter on the 6 hour? No. Fuka makes a very good point. It looks easy when it's already happened, and that's pretty much accurate. It looks easy after it's already happened, which is why I wanted to show you guys examples that I called out on YouTube or on the forum before they actually triggered, because I always find it a bit disingenuous when someone does a Forex webinar and they go back and they show you trade examples that, you know, you have no idea if they called it out before it actually happened. So, you know, they could just pick these perfect examples and make themselves look like geniuses. But these are all examples that I posted to YouTube or to the forum before they triggered. So if you go back to the analysis, you'll see me saying that this is a potential trade setup. So yeah, it does, you know, these all look easy. They look easy because they've already triggered and they already worked out. But when you're actually looking at the chart, it's not that easy. It's not that easy to make the decision to enter. All right, we're getting questions about my trading strategy, which is something that was discussed in previous webinars. So I'm just going to move on to other examples and discuss entries a little more. We actually have a trade right here, by the way. It's already triggered, so don't go jumping in. It's a bit too late. But this is also a viable trade here. I'm in this one. I'm short currently in this AUD/JPY trade. Not going particularly well at the moment. It started looking like it was going well. It dropped, and now it's kind of like retracing a bit. But you know, I used the exact same concept in this trade that I entered today. If you look at it, we have nice strong indecision forming on an area of resistance. entry was roughly down here, stop loss was here, and we have a risk to reward ratio. Whoops. A risk to reward ratio of 2, and my target is at the next barrier here. So my stop loss is beyond this resistance area here, beyond this resistance area. So that's the first barrier, and it's beyond this high here. That's the second barrier. Stop loss it's a bit higher than it's shown here, but you know, it's roughly up there. So my stop loss is beyond those barriers. My target comes before, or at, not before, sorry, at this barrier. So this barrier here where price has stalled recently, my target is you know, at that barrier. So my target is somewhat easy to hit. My stop loss is somewhat hard to hit. So that's a current open trade on AUDJPY. And it still looks pretty decent. I mean, it's not going amazingly well, but it still looks pretty decent. But anyway, I didn't want to discuss that trade for AUDJPY. I wanted to discuss a recent trade that I took on AUDJPY, which I think was this? Yeah, the 17th. Here it was. It was a very similar trade to today's trade, really. Very similar. Was it on the 8-hour though? I can't remember. Wait, I bookmarked them all for this webinar. I didn't call out this trade. Or maybe I did. Maybe I called it out on the thing, but it was posted by another forum member. 6 hour, yeah. So these are my stats for this. Not my stats, sorry, my prices for this particular setup. So I'm gonna copy these into the. Yeah, damn it. I knew that would happen. 1 second, sorry guys. I just want to make this window stick on top. Ah, that's better. So yeah, let's look at this setup in a little detail, and it was on the 6 hour. All right, so that's how this setup played out. That's how I traded it. So again, we're following the same very simple concepts. My stop loss was up here above that recent high. My stop loss was up here above the recent high. My entry was beyond the low of that indecision candle. So, you know, sellers push beyond that low. That low signifies that that low signifies that the short trend has started, that sellers have started taking control of price. So yeah, sellers push beyond that low, and my target was down here. My target was at that kind of like roughly at that barrier. See this barrier here? It wasn't that big a barrier, to be honest, but you know, price had bounced from here. So I wanted my target around about there. Now in this case, to be honest, price came down to here, bounced away. So it bounced before my barrier. It bounced before my target. So, you know, this isn't always going to work out perfectly. Sometimes, you know, price is going to bounce before your target. It just happens. It's something you have to learn to deal with. And in this case, it did. But eventually, it did end up going back down and hitting my target. So yeah, this ended up being a good trade. I can't remember if I hit my full target on this trade. Let me just double check real quick. No, I don't think I hit my target on this one, actually. I think think I adjusted my stop loss on this one a little lower because it was moving so slowly. Anyway, it doesn't matter. We're not talking about we're talking about entries today and how to figure out a good entry. So to figure out a good entry, you need to look at not only the entry, you need to look at your stop, your target, and your entry. You need to look at all these things together. So like I said, in this particular example, all these things together gave us a pretty decent setup. Let's look at Euro JPY real quick. Just want to quickly look at this example. This was a failed trade. This is another trade I talked about on YouTube before it triggered. But yeah, this trade ended up failing. The reason I want to show you this trade is because, you know, I just want to illustrate, I want to show you guys that even when you're placing smart stops, even when you're putting a lot of thinking into your stop loss, sometimes it's not going to work out well. You know, sometimes you're going to get these annoying situations where you get stopped out and then price goes on to hit your target. But you need to learn to put up with those things because it's, you know, that single trade, that one trade is not important. What's important is your trades over the course of the entire year. So if you're taking like 60, 100 trades in a year, that's what's important. Not any single trade or not even 5 or 10 losses. What's important is over the course of the entire year. So this trade was taken in much a similar way. My stop loss was all the way up here because I was following my rules about stop losses. I wanted to place it beyond the most recent high. I know these examples have all been short trades, but that's just, it doesn't mean I only take short trades. It just so happens that the last few weeks I've taken mostly short trades. It's just a bit of a statistical anomaly, really. I've had a string of short trades and yeah, I take long trades. For long trades, you just have to do the opposite, obviously. But yeah, for this trade here, my target was beyond the most recent highs, which were up here. So my target was beyond those highs. It was beyond the resistance area, which made for a good target. I keep saying target. Sorry, I mean to say stop loss. For this trade, my stop loss was beyond this recent high and beyond the resistance area. That made for a good stop loss, a smart stop loss. My target was, and I kind of broke my rules a little bit on this one, to be honest, just a little bit. Because, you know, it's very unclear. When you look to the left, it was kind of unclear where the barrier was. Because if you look all the way back here, then yeah, we did get some resistance here, some support here, but close to here, it looked like price was stalling here and here. You know, so I was thinking, you know, price would be strong enough to push down to here. And I guess it was in the end. It actually did push down pretty much exactly to my target. But sadly, it hit my stop loss beforehand. Well, actually, no, I don't think it hit my stop loss. I think I exited this trade early. But, you know, if I didn't intervene and exit this early, the point is it would have hit my stop loss eventually. Because my stop loss would have been right here. Well, it was right here. So yeah, it doesn't always work out in your favor. Sometimes it sucks. Sometimes price hits your stop loss and then it comes tumbling back down and it would have hit your target anyway. So you still have to put up with those situations, but you just have to learn to deal with that because that's just part of trading. That's just how trading is. It's not always going to work out in your favor. It's not always going to be perfect. But it doesn't really matter because in the end, like I said, your stats over an entire year are what's important, not your stats over a single trade or even 5 single trades. Sorry, not 5 single trades, or over 5 trades. Your stats over the period of an entire year, 2 years, 10 years, that's what's important. So yeah, don't let yourself get down if you catch a trade like this where it hits your stop and then comes down and hits your target. You know, that kind of stuff happens. The point is, and I hope you learned something useful today, place your stop beyond barriers and your target where it's easy to reach. Now is question time. So feel free to ask questions. While you guys do that, I'm just going to set up this little tool here so I can keep track of my trade. Wait, I'm going to move this over to here now. No, wait, people who are watching the recording can see. Nope. Yep. Any plans on a webinar on when to exit early? Yeah, that's going to be the next webinar. Next webinar, we're going to jump into early exits and exits in general, how to exit your trades, how to extend your targets. We're going to be looking at targets in a lot more detail. Do I trade on TradingView? No, you can't really trade on TradingView. They do have like a trading panel with this broker here, but I've never really looked into it. I don't trade with MT4 either. Currently I'm actually trading with a a custom platform. Proprietary. I can't say that word right now. Webinar is going to be next month. Stefan, do I always wait for a retrace to get into a position, or only when the risk reward ratio is not 1 to 2? It's a good question. I wait for a small retrace most of the times. And by small retrace, I mean, you know, price breaks 3 or 4 pips and then pulls back up. You know, that's what I kind of look for usually, just that very small retrace. You know, when we're talking about proper retraces, like 5, 10, 15 pips, you know, that's something that I only do if I need to get a good risk to reward ratio on the trade. Will I ever do a webinar on 5-minute charts? Yeah, I do. I plan to do a webinar on 5-minute charts at some point. I want to do a live trading webinar on 5-minute charts where I actually trade live. But I don't know. It's going to take a while to organize that, really. When the trade inverts before target, do you wait for it to hit stop? Oh, right. When I trade retraces. No, not often. Usually I pull out early. I tend to exit my trades early. Trading is about minimizing your losses and maximizing your gains. And waiting for a price to hit your stop every time is generally not the best tactic. Minimizing your losses by exiting early is generally a good thing if you know how to do it right, which is what we'll be discussing in the next webinar. I didn't take the USD JPY setup, but if you want to take a quick look at it, I mean, it's a good setup. What can I say about it? Wasn't really something I would have traded on the daily. It's more of a 12-hour setup. It's a nice solid setup. I took a very similar setup on AUD JPY, but where's my thing? One sec. Yeah, I don't really know what you want to know about this setup. It's a solid setup. There you go. I probably would have traded it like this. It's that simple. Entry down here, stop loss up here because it's above the recent highs. I would be looking at the high of this candle. That's the recent high. So it's above that high. It's above resistance. Risk to reward ratio is good. Yeah, it's a good setup. If indecision forms near a support resistance area but not inside it, would you take it? Yes, I would. Where do I talk about leverage, pips, etc., the trading software? I don't really talk about leverage. Leverage is something that people just need to do for themselves. Do you mean money risk management? If you're talking about risk management and not specifically leverage, yeah, that's part of the Forex Mastermind course. Yeah, you get a link to the webinar. Tom, yeah, you know, I agree. I need to be more consistent with the daily analysis, and I'll try to be. Just life gets in the way sometimes, you know. Someone noted at the start of this webinar that my bookmarks are organized. My bookmarks are like showing in order of importance. That's what they said. They said that my bookmarks, the ones up here, are in order of importance. And it's very much true. My bookmarks are in order of importance. Forex, cooking, because I love eating, and gaming. So that's what's important, mostly. So gaming gets in the way of... gaming and cooking get in the way of me doing my daily analysis for Forex. Nothing really gets in the way of Forex trading, but the gaming and the cooking, they get in the way. So, you know, I'm not very consistent with my daily analysis videos. I'll try to be more consistent in future. Opinions on doing support resistance areas on line graphs, don't do it. Walter, are you asking me to do a tutorial on how to use Forex software? Like a particular broker platform? Because if that's what you're asking, I don't do that stuff. Plenty of videos online about that. Which time frame is the best for trading? There's no such thing as a best time frame. I look at all the time frames really. I look at the 3 hour, 4 hour, 6 hour, 8 hour, 12 hour, and daily. And I even look at the time frames in between, like the 5, 6, 7, but I don't actually, sorry, not the 6, the 5, 7, 9, 10, 11, but I don't actually trade those. We just looked at the USD JPY setup, Mohammed. I've already answered that question, Abdul. I already said yes, I would take the trade if it forms near to a support resistance area but not on top of it. In reducing stop losses, would your advice be to put your stop loss to break even once price moves 30 pips in your direction? No way. That makes no sense. 30 pips is a very arbitrary number. 30 pips on Euro JPY is something that could happen in a few seconds, but on, I don't know, a slow moving pair, USD CHF maybe, it could take hours for it to move 30 pips. And so it's a very arbitrary number. You can't just make, pick a number out of thin air. All right, Nick Pino is asking a good question. So you have a short setup forming like you have showing, but the next candlestick breaks a new high before forming a low. Do you pull the trigger or do you adjust your stop loss? I usually adjust my stop loss and then I enter the trade, or I just don't enter the trade. It really depends, but yeah, most times I'll just adjust my stop loss and enter the trade by trade basis. Which broker do I use? My broker is UK only, and it's a kind of private broker. It only accepts very large accounts. So I don't share my broker. I don't tell people what broker I trade with. But even if I were to, it's not a broker that's applicable for most people here in this webinar, because it's UK only and most people here are from the US, and also because it requires a very large initial deposit. Do I consider the trend when looking for entry points? Yes. Do you stack your trades? Generally, no. I like to only enter one trade at a time. Sometimes I enter two trades, but that's just because I like a relaxed approach to trading. Yeah, let's call it what it is. I like a lazy approach to trading, not relaxed, lazy. Managing 5 or 6 trades at once, I can't be bothered. It's too much of a hassle. 1, 2 trades. The way I see it is, if I can make enough profit from 1 to 2 trades, more than enough profit, if I can make enough profit to kind of live comfortably, then yeah, I don't need to take 5 or 6 trades per week. I'm happy with 1 to 2. But, that being said, my trading strategy, it has the possibility of taking 5, 6 trades per week. It just depends on how you approach it. I filter out all but the best looking trades. I only go for the best looking trades, the ones that have a very good potential of working out, the ones that I analyze and I say this trade is almost perfect. Those are the ones I go for. There's people who are trading my strategy who take like 5, 6, even 10 trades per week. What do? They look at things differently. They take, even the kind of crappy looking setups. As long as it's a setup that falls within their criteria, they take it, and they're still profitable. They've just got a slightly different approach, and they're happy to manage 5, 6 trades at one time. So it just really depends on the style of the trader. Yeah, of course. Yeah, like I said, I was going to link my webinars. I was planning on linking them in the email, but I can link them here too. No problem. You just have to go to my YouTube channel, by the way. There you go. That's my YouTube channel. But more specifically, you have to go to the playlist. All right, yeah, if you go to the playlist here, this playlist, that will show you my most recent webinars. Abdul, if a trade starts moving towards your target, do you just suggest a trail stop loss near the entry or above? No, I don't use trailing stops. All right, guys, I'm going to call an end to this webinar. Thank you for attending. I hope you found it useful. And I'll see you guys in the next webinar, which will be held next month, around about the end of it. So around about the end of June. So I'll see you guys later. Thank you for attending. Bye.